Welcome back to Talk Tickers. Okay, so Firefly Aerospace just dropped its Q3 numbers and wow, the market reacted in a big way. The stock absolutely lit up after hours. So the big question for everyone is this just a momentary blip or is this company actually on the launch pad? Let's get into it.
So here's how we're going to break it all down. First, we'll look at the headline numbers that got everyone so excited. Then, we're going to get into the nitty-gritty, the good, the bad, and the ugly of their financials. After that, we'll talk about management's new strategy, what the future might hold, and then finally, we'll give you our take on what to expect for the next call.
All right, let's start with the immediate reaction. You have to remember, the stock has been getting hammered lately, especially after that Alpha rocket failure. So investors were really looking for a reason to feel good, and, well, Firefly gave them one.
And here you have it, an 18% surge after the bell. This was a massive relief rally. It wasn't just a small beat. It was a big enough surprise to really catch the market off guard and send the short sellers running for the hills.
So what exactly fueled this thing? It really boils down to two key beats. First, you've got revenue coming in at $30.8 million, which was nicely ahead of what the street was looking for. But the bigger story, honestly, was the bottom line. Their non-GAAP loss was 9 cents better than feared. And for a company like Firefly that's still in growth mode, investors are often willing to look past losses if it looks like the business is moving in the right direction.
Okay, so the headlines look great, but you know us. We've got to dig deeper, right? A headline beat never tells the whole story. And with Firefly, there are some really conflicting signals right now. Let's start with the good part.
And I mean, wow, just look at this. This is the heart of the bull case. The top-line growth is just explosive. A 38% jump year over year is great for sure, but a 98%, almost double, jump from just last quarter, that is the kind of crazy momentum that gets investors really excited about the whole space and defense story.
But, and this is a really big but, that growth is costing them a lot. Both their net loss and their adjusted EBITDA loss got much wider compared to last year. And maybe most concerning is that gross margin. It got squeezed by over 700 basis points. So what that really means is, yeah, they're selling more stuff, but their actual profitability per sale is getting worse, not better.
And this number right here, this is the one that probably keeps some investors up at night. They burned through $62 million in cash this quarter alone. Now, look, for a company like this that's investing in R&D and trying to scale up, a cash burn is expected, but that rate isn't sustainable forever, even with a decent balance sheet.
So, when you're burning through that much cash, you'd better have a really compelling story to tell Wall Street, and Firefly's management does. They're basically reframing the entire company narrative. It's a pivot away from being just a rocket company to becoming a full-blown space and defense tech platform. And the key to that whole pivot? The SciTec acquisition.
You know, CEO Jason Kim used what I thought was a brilliant analogy on the earnings call. He said Firefly builds the hardware smartphone, SciTec develops the software apps. And that just nails it, doesn't it? It perfectly explains the strategy. You take Firefly's hardware, the rockets, the landers, and you pair it with SciTec's high-margin, specialized software and AI. It's a perfect match for the defense world.
Now, this deal was a total game changer. We're talking about an $855 million acquisition. Right off the bat, it adds $170 million to their defense backlog. But the real prize, the crown jewel here, is SciTec's involvement in something called the Golden Dome program. Think of it as a massive next-gen missile defense system. This deal gets Firefly a seat at a very big table, and, crucially, brings over a huge team with the security clearances needed to do that kind of work.
Of course, management couldn't just talk about the exciting new stuff. They had to address the elephant in the room, that Alpha rocket failure. And to their credit, they tackled it head-on. They laid out this super clear 4-step plan to fix things. And they really hammered home that this was a process issue, not a fundamental problem with the rocket's design. That kind of transparency goes a long way with investors. So, with the new playbook in hand and the rocket issue being addressed, the question is, where do they go from here? Let's talk about their guidance for the future and what you should be watching for over the next few months. This right here was the other piece of news that really got the stock moving. Management didn't just raise their revenue forecast, they blew right past what analysts were expecting. Guiding to $150 to $158 million for the full year is a huge signal of confidence and shows that the SciTec deal is already starting to contribute.
Alright, so if you're following Firefly, here's your checklist for the next 6 months. Number 1, without a doubt, is the Alpha rocket's return to flight. That has to go well.
Beyond that, you're watching how smoothly the SciTec integration goes, looking for any progress on their lunar missions, and keeping an ear out for any more contracts related to that Golden Dome program. These are the things that will prove whether the bull case is for real.
Okay, so let's wrap this all up. What's our bottom line heading into the next quarter, and how might we think about this stock? Here's our official take on the whole setup.
We are initiating coverage on Firefly with an outperform rating. Listen, the risks are absolutely real. The cash burn is high, and they have to execute. But we believe the market is still stuck thinking of Firefly as just a hardware company. This pivot into a higher-margin defense tech business, thanks to SciTec, is a game changer that we just don't think is fully baked into the stock price yet.
Now, for those of you with a higher appetite for risk, here's one way you could think about playing this. The core idea is that Wall Street is still behind the curve on this story. So one action could be to look at long-dated call options to capture that potential upside if the Alpha rocket returns to flight successfully. But to hedge that bet, you could use a little bit of that money to buy some shorter-term puts, basically as insurance in case that launch gets delayed.
And as always, you know the drill. This is not financial advice.